In this video, you'll learn how to create profitable trading strategies using the TrendTimer application. So we'll start by launching the TrendTimer application. After the application loads, we'll be on the welcome screen, and we want to click the Update Fund Data button to download today's closing prices. After the prices are updated, we'll click the Run TrendTimer button to launch the application. We're next taken to the testing screen, and this is the screen you'll spend most of your time working with when using the TrendTimer application. In the top graph in green, we have the S&P 500 Index Fund, VFINX. The S&P 500 Index Fund is a mutual fund that holds each of the S&P 500 companies. So when you own the index, you're essentially owning the entire market. And when you look at the graph of this fund, it gives you a very accurate picture of what the market has done over this last 20 years. So we've had three major bull markets during this period, but we also had the dot-com meltdown in 2000, and then the financial crisis in 2008. So if you look at the peak in 2000, and then you move the cursor across the screen, you can see that in 2012, the market was trading at about the same level. So if you were invested during this period, you really didn't make any money at all. And you might have even lost money if you timed these downturns incorrectly. Someone sold at the bottom. Hopefully it wasn't you. As you probably know, there's a popular style of investing called buy and hold. So you buy into the market, you add to your investments over time, and in the long run, you'll get a good rate of return. And this is actually partially true. Over this last 20 years, the compound annual gain for the buy and hold was 8.7%. Not too bad. But anyone who's been investing for the last 20 years can tell you that these two downturns were pretty stressful. 2 times in the last 20 years, the market's lost half of its value. For any new investors who didn't experience any of these downturns, you should count yourself lucky. But you should also look at this graph and think about if buy and hold is really the way you want to invest. TrendTimer trading strategies beat the buy and hold result by utilizing 2 powerful techniques. The first of these is to avoid bear markets. Let's take a look at how this works. Instead of the buy and hold method of investing, wouldn't it be better to be fully invested during the bull markets and then switch to either a cash or bond fund during the bear markets and avoid those huge losses? When you work with TrendTimer, the funds you're working with are listed in this section here. So in the Fund 2 position, we have PTTRX, which is the bond fund, and I can add this to the graph by checking the checkbox here. So what would happen if, instead of participating in these market declines in 2000 and 2008, we switched to the bond fund? As you can see, it has more of a gentle increase over time. It's not as nearly as volatile as the overall market. And we can see what the result of this would be by activating the switched graph. And the switched graph activation button is here. It's turned off right now. It's the S with a line through it. But if I click on this, I can turn it on. So what do we have here? As you can see, we have the buy and hold for the S&P in green. We have the buy and hold for the bond fund in red. And then above this, we have this switched line. And this is what TrendTimer does. It helps you develop strategies to beat buy and hold. And one of the ways it does this is by exiting the market whenever there's a bear market. And you can see here that the switched line here that alternates between green, the S&P 500, and the bond market red, it's rising dramatically above the buy and hold result for the market. If we look in the switched area where the cursor is pointing right now, we can see that the compound gain for this new strategy here, instead of 8%, is 13%. And our start investment of $20,000, instead of growing to $100,000, it's grown to $226,000 during the same period. As the graph shows, at any given moment, the strategy is either owning Fund 1, which is the index fund, or Fund 2, which is the bond fund. Now these buy and sell signals are determined by the trade rule, and you can see the trade rule here. There's a drop down, and in this case we're using the moving average trade rule. We can see the parameters that are used to configure this trade rule by clicking the blue button next to the drop-down. The moving average trade rule uses 2 parameters. There's a short average and long average. And these are exponential moving averages. In this case, we have a short average of 40. So that's the exponential moving average for the last 40 days and a long average of 238. And the graph for this can be seen in the bottom here. I can expand the graph a little bit to get a little better look. I can actually click on the icon here to make it full screen. So the short average is the purple line here. The green line and the red line are the S&P 500 index fund. And the yellow line is the long average. And so the way this trade rule works is every time the short average is above the long average, we're buying the index fund. And every time the short average crosses below the long average, then we switch to the bond fund. So you can see in 2000, this crossover happened. The bond fund was purchased. That's indicated by the red line here. And so we missed out on the steep decline, which is great. After the markets turned around and a new bull market began, another crossover happened. So the short moving average crossed above the long moving average, and that allowed us to participate in this next bull market that lasted several years. Then again, in 2008, another crossover happened. The short moving average crossed below the long moving average, and an exit to bonds was made. And the steep losses of this correction were also avoided. Once again, when the market recovered, another crossover happened, and the switch to the index fund happened again. So you can see that over time, this trade rule has done a really great job of avoiding these steep declines. Just this simple thing has been enough to double your return over this period. And not only double your return, but also reduce the volatility. You notice the switch line here, it's a nice consistent increase that happens over this 20-year period. Now here's where things get interesting. As I mentioned before, there are two techniques TrendTimer implements to beat the buy and hold return. The first, as we just reviewed, is to avoid bear markets using the moving average trade rule. The second, even more powerful way TrendTimer boosts returns is by using sophisticated momentum algorithms to detect market-leading stocks. During bull markets, TrendTimer momentum strategies invest only in the stock or fund out of a list of up to 10, with the greatest upward momentum. By repeatedly hitching a ride on the most rapidly increasing stocks, this can help propel the returns far above the buy and hold result. I'll show you how this works. So we're back to our strategy here, and currently during the bull markets we're only owning VFINX, which is the S&P 500 index fund, and you can see that we currently have just two funds in our strategy. We can actually add additional funds to the strategy, and I'll show you how this works. So I've got my fund list on the right. I'm going to add Boeing stock to the list by clicking the green button. Okay, so you see what's happened here. Instead of just owning the index fund and the bond fund, now some of the time we're owning Boeing, which is represented by the blue section here. Also notice that as soon as I added that third stock to the mix here, there's several new parameters that showed up. When you add the third stock, the strategy becomes what's known as a momentum trend strategy. And there are several parameters here that are used to configure the strategy. I'll explain how these work in a little bit. But for now, I want to go back to adding funds. We can add up to 12 funds to the strategy. So I'm going to add some additional stocks here, and you can watch the graph and see what happens. So already adding Boeing to the mix has improved our results, and the switch line is rising even higher above the buy and hold of the index fund. So let's add some additional stocks. Let's first add Emerson, FedEx, Gilead Sciences, Intel. So you can see every time I add a new stock, the result here changes a bit. Let's add some more. Coca-Cola, MasterCard, Medtronic, Qualcomm, and AT&T. Okay, now we have a switched line here that's many different colors, and each color corresponds to the ownership of one of these dozen stocks. We can visit the Results tab to see how our strategy is performed. At the bottom there's a switch section, which shows that our strategy has had an annual compound gain of 30.91% since 1994. So that's really quite good. If we want to see even more details, we can visit the Results screen. So if I click on the Results button up here, that brings me to the Results screen, and this screen provides quite a bit more detail about how our strategies performed There's a section at the top that lists the period results. It shows the results for every trade that we've made. There's a yearly results section, and then there's also a yearly graph. But let's go back to the testing page. We can click on the Params tab to revisit our list of stocks. Now the stocks we're using in our strategy are all large, well-known companies. Most of them have been around for a very long time, and we've had a great result with this particular mix of stocks. But we can experiment by substituting in some different companies. And so let's replace Qualcomm with, how about Walmart? And let's replace Intel with Procter & Gamble. And let's replace Gilead Sciences with Nike. So you can see every time I substitute in a different stock, the graph changes somewhat, but we still have a good result. Let's visit the Results tab again to see how we did. It looks like the compound gain has dropped to 21.68%, which isn't as good as before, but it's still very good. Our initial investment, which we can see here of $20,000, has still grown over 20 years to $961,000. Another way to demonstrate how well this strategy is performing is to go back to the Params tab, and let's turn on the graphs for some of these funds and stocks that we're using. So we can click the checkbox here to turn on the bond fund in the graph. Let's turn on Boeing, Emerson, FedEx, Nike, Procter & Gamble, Coca-Cola, MasterCard. So as I turned each of these on, you can see that they're added to the graph here. Let's make the graph a little larger here. And you can see that the switched line of the strategy has risen above the buy and hold for any of the individual stocks within the strategy. Next, let's take a look at the parameters used by the strategy. When we added the third stock to the strategy, several new parameters appeared. I showed you them briefly before, but let's take a closer look at how these work. So I can scroll the window down, and we can see the parameters here. I've already discussed the short average and long average and how this is used by the moving average technical indicator. But let's take a look at the parameters beneath this. We have best gainer A days through best gainer F days. And these are the parameters used to calculate the momentum for the strategy. Let me first change the values to some nice round numbers. So I'll change this to 10, how about 30, 60, 120, 240, and 300. Each of these best gainer parameters represents a time period. I think the best way to explain how this works is using a spreadsheet. So on our spreadsheet, in the first column we have time periods. So as I mentioned before, we have the 10-day, 30-day, 60-day time periods, etc. And our strategy uses 10 stocks, but for this example, let's pretend there's only 3, Nike, MasterCard, and Walmart. So what the strategy does is, each night after the market closes, it calculates how each of the stocks has performed in each of the periods. So in this example, for the last 10 days, Nike had a 1% return, MasterCard had a 2% return, and Walmart had a 3% return. Since Walmart had the highest return, it wins that time period. The next time period is 30 days. Nike had a 3%, MasterCard 2%, and Walmart 1%. So Nike wins this time period. In the 60-day time period, it looks like Walmart won with 20% gain. In the 120-day time period, with a 30% gain that's larger than the other two, Nike wins that one also. Now for 240 days, Walmart wins with 100%. For the 300-day time period, Walmart with a 300% gain also wins. Now of course I just made these numbers up, but play along. So as you can see here, for the 6 time periods and these 3 stocks, Nike won 2 of the time periods. MasterCard didn't win any of the time periods. And Walmart won 4 of the time periods. So the strategy performs a voting process. And since Walmart had the largest percent gain for the greatest number of periods, it wins this voting process, and the strategy will choose to buy Walmart. Going back to our list of parameters, the next parameter is minimum hold days. And the minimum hold days allows you to instruct the strategy to, when it makes a decision to purchase a stock, to hold it for a minimum amount of time. So in this case, if our strategy decides to buy Walmart, it will hold it for at least 114 days. Without this parameter, the strategy might trade too often. So instead of every 3 months or so, you might be trading every couple weeks, and that's more than most people want to trade. The next parameter is stop loss, and most of you are probably familiar with this. The stop loss instructs the strategy to limit losses by exiting a stock if the loss is too great. So in this case, the number being used is 89. So if the current stock owned by the strategy drops by 89%, the strategy will sell that stock and choose another. 89% is a pretty high value, and most stocks don't drop that much. So for this strategy, using this number, it's actually not being used. But you could set this for 10% or 15% or whatever you like. The trailing stop is similar, but it's a little different. The trailing stop allows you to instruct the strategy to exit a stock when it is dropped by a certain percentage from the most recent high. Let's take a look at the graph for Apple stock. And let's say, for example, we had a 16% trailing stop loss. As long as the price of the stock was increasing, no action would be taken. So in 2010 and 2011, you would continue to hold the stock. In 2012, there was a pullback, so there was a 16% pullback here. So if you had a 16% trailing stop loss, Apple would be sold here. Now in the short term, this wouldn't have worked out well because Apple reversed course and went up to $700. But over the longer term, the stock did, as most of you know, drop below this point, and so that would have been a pretty decent exit point. So we covered everything you need to know to create your own momentum trend strategies. There's just a couple other things I wanted to show you. So let me scroll up here. Let's check the results for our current strategy. We can see at the moment our compound gain return is only 18.69%, which isn't terrible, but let's see if we can find some better results by adjusting the parameters used by the strategy. And to do that, we can visit the testing screen and perform an automatic test. And what the automatic testing tool does, it allows you to experiment with different parameters to see what the results are. And then what we're going to do is we're going to set a test size here of 100, and then I'm going to click the Run Test button. So our test is now running, and you can see that the graph is updating automatically. So every time the graph updates, TrendTimer is experimenting with a new set of parameters. And these parameters are generated randomly. So one thing to notice here is that in almost every instance, the switched line of the graph is rising above the individual lines for the stocks contained in the strategy. So you can run hundreds or thousands or even tens of thousands of tests, and this will help TrendTimer find the parameters that work the best. There's literally billions of combinations to test, and so the testing tool allows you to do these kinds of tests easily. Obviously, it would take far too long to do this kind of testing manually, so the testing tool is very helpful. As the tests are ran, what TrendTimer does is it saves the top 10 results. And so after we're done with their testing, I can show you these results. It looks like the tests are just about finished. Okay, so the testing is finished, so I'm going to scroll the screen down here, and we can see that there's a top auto results section here, and it's got the top 10 results that are saved. It looks like our top performing test had a compound annual gain of 36.62%, and then it goes down from there. The bottom test is 31.51%. So all of these are a better result than what we started with. And if we want to look at these tests, we can just click the link. So I'll click the top link here. Okay, now you can see that this strategy is loaded. So this looks like a really good strategy. It's got a very high compound annual gain. And what I like about it is it has a nice continual increase. And so there's no major declines along the way. It just has a nice upward slope. So I think I'd like to save this strategy. And so to do this, I'll scroll back up here, go back to the param screen. I'm going to hide the parameters. And so that will reveal the save button here. Now if you have a larger monitor, you won't have to deal with so much scrolling, but in order to make the video watchable, I had to kick the screen size down a bit here, so that's why I'm scrolling so much. Anyway, I'm going to click the save button. I'm going to give it a name, Saturday, so I'll just call it Saturday Strategy. Click Save. And so now the strategy will appear in the My Strategies screen, so I'll visit that in the My Strategies section. So if you look to the right, you can see Saturday Strategies. So if I want to load this in the future, I can just click the link from here. That will load the strategy. If I go back and I click the checkbox next to the strategy, and then I click the little envelope down at the bottom here, that will flag the strategy to be included in the nightly signals email. And so every night when I get that email, I'll see the latest buy and sell signals for this strategy and the other three that I have flagged. We've covered quite a lot here. You've learned how the moving average indicator can help you avoid bear markets. You've seen how TrendTimer's momentum trend algorithm dramatically improves returns by investing in momentum-leading stocks. Finally, we've seen how TrendTimer's testing tool allows you to automatically discover top-performing strategies. I want to make one final comment about how to invest using TrendTimer. As we've seen, each TrendTimer strategy recommends owning a single stock. Our advice is that you should never invest all your money in a single strategy. Instead, diversify your portfolio by dividing your money between several strategies. Depending on how much you have to invest, we recommend you follow somewhere between 8 and 30 strategies. Thank you for watching. We hope you enjoy using the TrendTimer tool. Spend some time experimenting with all the various features. Whether you prefer to use the bundled, ready-to-use strategies or create your own, we're sure you'll agree that investing the TrendTimer way can help boost your returns. For more information about the TrendTimer application and service, please visit www.trendtimer.com.